So, did you apply for lens card? What if you have applied and you get allotted? And what if it lists at a premium? Probably it will. Do you think that's the best thing to happen? Probably not. And that's what I will share with you in today's video. Getting allotted in the IPO need not be the best thing for you. Probably not getting allotted could be better. But the best thing is if you don't even apply for the IPOs. Yes. And that's what I will share with you today. What does it really mean when you are applying for IPOs? Is investing in IPO the best way to create wealth? Right? We all investing in IPOs to make money, to gain. But really, can you build wealth through IPOs? Probably not. And I will prove to you today. Even if you get the best of the IPOs, it doesn't guarantee you will make money or build wealth. Even if it lists at premium, it doesn't mean anything. And that's what we will see today. A lot of insights in today's video. Don't miss. Watch till the end. There is a lot in this video. I have personally gained a lot of knowledge. I also have invested, I've also applied for IPOs in the past, and this video will give you enough wisdom to know whether you should apply or not. And probably, I hope and believe that by the end of this video, you'll make the right decision. Hello, I am Franky Fernandes. I'm the founder of Harmony and Money. It's a community for young families to grow their wealth in a manner that they will also grow their relationship and live happily and have a strong marriage. And my videos are to help you build wealth in the best way. And today it's a very interesting video. So let's get into this video. Let's first begin with the IPO statistics since 2021. And we look at each year 21, 22, 23, 24, and 25. So let's look at the screen. So the IPO performance overview from 21 to 25. So 2021 was the golden year for IPOs. 64 IPOs listed with an impressive 31% average listing returns, 75.3% success rate. Top performers Sigachi with almost 300% listing gain, and notable winners like Paras Defense, Latent View Analytics, Nika, Zomato, and but the biggest disappointment was Paytm, and the rest of them have given more than 100 and some of them above 60%. Amazing, amazing listing gains. For 2022, there were 38 IPOs listed with 10% average returns, less than 10%, much lower than 2021. 60.5% success rate, 23 positive listings. Top performers Hariom Pipe, 51% gain. Notable listings like DCX, Harsha, and Electronic Smart, all above 40% returns. And the poor performers were ABN Holdings, which listed flat, and Rainbow Hospitals, which listed negative 7%, and LIC almost negative 8%. 2023, strong recovery, 59 IPOs with almost 30% average returns, highest success rate, 51 positive listings, which is 86.4%. Top performer Tata Technologies, stunning 162.60% gains. And how much is it right now? What are the what returns has it given? Compounded returns? We'll see that. Other stars, Utkarsh Small Finance Bank, Idea Forge and IRDA, almost close to 90% gains, only 8 negative listings out of 59. 2024, again, a record year of IPO activity, 93 main board IPOs. So all that we have been seeing now are main board IPOs, because there could be many more IPOs, including the SME IPOs, but we are talking about only the main companies. Around 80% success rate. Top performers Vibhor Steel, Jyoti CNC, Bajaj Housing Finance, Premier Energies, Interarch Building Products. All amazing gains, three-figure gains. Notable large IPOs Hyundai and Swiggy. In 2025, 80 main board IPOs, average returns 21%, 55% success rate. Midwest 9.39 listing. Rubicon Research, LG Electronics 50% listing, 50% gains. Canada Robeco AMC at 5.36 listing gains. So here is a summary of all that we just now talked about: 2021, 22, 3, 4, and 5. You can see the number of IPOs, average listing gains. So if you can see here, 2021 was the highest, 2023 was the second highest, 2024 also was quite good, except for 2022. I think we have had very good average listing returns, and success rates have been above 50, except for this year. We have still not completed the year, but above 50, 60, 70, 80, even close to 90. And these were the top performers, and other notable winners, and these are the disappointments. I hope this has given you a very good understanding about what happened in the last 4 to 5 years in terms of IPOs. What were the gains? What were the positive outcomes? And probably when we look at it, the negative is very less. So now let's look at how has it done sector wise, right? These were the summary of all the stocks, all companies put together. Let's take a look at the sector listings right now. So here are the sector winners. So we can clearly see here which are the sectors that have actually done very well. So technology is the number one, which is around 35 to 45% average listing. So very good listing returns, strong long-term winners. And then comes consumer, close to 30, healthcare, pharma, between 25 and 35, industrials, less than 30, auto components, 10 to 15, and real estate. So I think probably these are some very top sectors in terms of average listing gains. So the IT digital outperformed on fundraising and listing day gains, continuing multi-year leadership. So ITs have done well even in the past. Industrials and green energy, infrastructure, renewables, and capital goods saw rising deal flow and strong premium, showing strong policy tailwinds, which means now the good days are back again for the industrial and the green energy. Healthcare and pharma delivered robust gains, but varied by subsector and scale. So as a sector, it was mixed. Probably there were some sectors that were probably that gave more returns than the other subsectors. And finally, financials and fintech mega deals drove volume and value with strong initial returns despite mixed secondary price action. So this has given us a snapshot of the sectors, how each sector has done. So what we have seen is overall the IPO market has given great returns, especially on the listing day gains, and more companies have been on the positive and less companies on the negative. And we'll also take a look at what is the percentage of positive and what is the percentage of negative. But right now, we will look at what is the current status, current prices of some of these stocks, some of these IPOs. Now, this is a very interesting number, and I pay attention to this. So in 2021, number of IPOs were 64, 47 IPOs with listing gains around 70%, and 30% did not list at premium, probably at discount. Percentage of IPOs currently above listing price, 62%, which means on the listing day there was 70% and now it is 62%. It has gone down. Same here, it was 61%, now it is 49%. So IPOs, companies that had listed as positive have become negative also. So 86% here and now it is 63. Again, gone down. 79% has gone down to 58. 67% has gone down to 50%. Right? Which means, although many of them listed as positive, some of them have slipped into the negative territory. That does tell us something about IPOs. And here are some of those companies that had listed as positive, right? 143 listed as 150, 91, 122, 140, 170, right? All of them are positive, but see their current prices. 150 has become 50, 120 has become 70, 170 has become 100. See how the prices have come down. Listing day gain 35%. Today it is negative 24%. Listing day gain 5%. Now it is negative 65. So they are all negative right now, although there were positive gains. So what does this tell us? Probably you can let me know in the comments. By watching this, what does it tell us about IPOs? Just from this preliminary analysis. That means, obviously, this tells us that IPOs that show gains need not continue as gains. They can become negative. They can slip into the negative territory. Is that all? Anything else can happen to IPOs? Let's see further. I'm sure, I promise you, this will get more and more interesting. So here we see a graphical representation of IPOs above listing price, and here are below, right? Here, that means 62% have listed as positive, 38% negative. Let's take a look at how it looks year on year. So, what about these average returns of 62%? What is the average returns of these 62% IPOs that were above issue prices? The 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 average is 25. And if you were to split it into year on year, 2021, the average return is 40%. That means as of today, this is the returns. 2022, it's 18, 23, 30, and 25. So as of now, the average returns of these IPOs, that means all these positive IPOs put together, that means all the companies that listed at premium, if you were to combine them all together, this is the cumulative return as of today. And what is the average loss of those that 38% IPOs trading below issue price? It's negative 30%. If you had subscribed and if you had got allotment in all the IPOs that were positive, your average returns by today would be 25%. Right? Just a simple average we are taking here, not a year on year average. This is very simple average. And your losses would be negative. So what will be your weighted average? So your weighted average returns of all the IPOs, that means all the gains, all the losses put together, what you would have received as of today would be 4.5% gains. But now you would say that probably I would not subscribe to all the IPOs. I'll only subscribe to the good ones like Tata Technologies, Nika, Zomato, Nazara Technologies, Sigach Industries, that you would only apply for these and you will not put your money, you will not bet your money on all the IPOs. So let's take that scenario. What happens if you were to only chase the good IPOs? Now, of course, we don't know which one will turn great or good or bad. Correct? We don't know anything. We are just speculating. So just imagine that you subscribe only for the good IPOs. And if you attempt to subscribe only for the good IPOs, what happens? Now, what is the probability that you will get allotment? The oversubscribed high demand IPOs, if the IPO receives 30 times retail oversubscription, only one out of every 30 applicant receives an allotment, which is 3.3% is the chance probability. That means if 6 lakh retail investors apply and only 20,000 lots are available, only 20,000 is about 3.3% will get an allotment and the rest will not. So if you chase only after selected IPOs, obviously those good IPOs like LG Electronics probably or Tata Technologies, they would obviously get much, much oversubscribed. So what are your chances that you'll get the allotment? Very low. Again, the what has been the distribution across 2020 to 2025? About 77% of IPOs are oversubscribed in the retail category. Only 23% were adequately subscribed. 20% of IPOs had a subscription rate between 1 to 2 times, with 22% at 2 to 5 times. For these, probabilities are typically between 50% and 100% in low interest issues and 10 to 50% in moderate issues. And we know that some of them have subscribed for 10, 15, 20, 30, 40, 50 times. I don't know how much. I just checked, for example, Tata Technologies was oversubscribed by 200 times for the retail investor. So what are your chances? Very, very negligible. And in oversubscribed IPOs, all retail investors have an equal chance to get just one lot, whether they apply for one or many. A computerized lottery random selects the successful applicants. So our chances are extremely bleak. And I know it with experience. I have put up applied for a few IPOs. I got only two IPOs. One was LIC, which listed negative, and the other is, which I'll come to shortly, which is positive. So these are the stats. What are your probability? If it is extreme, that is 10 to 30 times, and which is actually which most of the IPOs have been 5, 10, 15, 20. As I said, for Tata Technologies, it was 200 times for retail category. So your probability, when it is 30, it is 3. When it is 200, which means it is less than 1%. It is point, it goes into decimals. So you cannot chase only good IPOs. If you want to increase the chances of getting more IPOs allotted, you have to spread your net wide. You have to subscribe for many more IPOs. And that is where you will probably get, but there could be a mixed bag of positive and negative. Now, this is very, very common, right? When we chase only good IPOs, there are chances are very low. I've also done. I have not subscribed for all IPOs, probably only four or five times probably. And out of that, twice I have got, and one was negative. Obviously, that was LIC. It was not so much oversubscribed, probably, so I got it. And another company, pharmaceutical company, which I'll talk about it. I got allotted. So here, what happens when you do not get allotted? What is happening is you are you invest, you wait for probably those 15 days or whatever, and then you get your refund. Then again you apply and you get your refunds. If you keep doing that with your money, whether it is one lot, maybe 20, 25,000, or a lakh, 2 lakhs, whatever. Let's take a look. Just imagine now this is from 2021 to 2025. So here, if you see, the market is going up, and you invest here, you subscribe for an IPO, you don't get it. You get a refund. You subscribe for an IPO, you get a refund, and you try here, probably got here, but the market has moved from here to here, and the market would have moved. So if you see here, the market is around 14,000, and here the market is around 18,000. So what has happened is, when you invest and get your refund back, very important, I want you to understand this, extremely important. When you invest, you don't get allotted that refund, you have lost time. You have lost time in the market. You have lost the compounding that will happen. You have lost time in the market. That means, if you had invested here in the Nifty, and here you would have got gains by around 4,000 points. That could translate into thousands of rupees. And if it is lakhs, just imagine a few lakhs. And this is one of the biggest problem I have seen with my own investments when I try to do it. When you don't get it, your money has not worked. It has not even got the interest, let alone the market gains. So the more you try and more you don't get, you are losing. You're losing time in the market. So there is a price you pay for not getting allotted. Now, whether it's a good IPO, good stock, good company, or a bad company, whatever it is, you have lost time in the market. If you had, if you got allotted in a bad company, that's a big loss, because the prices have come down. You have got negative returns. If you don't get it, sometimes we feel, oh, you regret for not getting it. Probably it is good. At least you have not got negative returns. But the biggest loss is that you have lost time in the market. You have lost the market that was going up. You have lost that. So this is one of the biggest drawbacks, I would say, of chasing an IPO. And there are much more. As we go along, you will see there are much more. Some of them are really shocking. Now just imagine that you got some of the best IPOs like Nazara Technologies, Paras Defense, or Tata Technologies, Zomato, right? And you got some of these, and you would say, yes, see, finally I gained, because I have gained much more than Nifty or Nifty 50 or Nifty Next 50, or some of the mutual funds. Really? Let's take a look at one by one some of those top IPOs. So here is Nazara Technologies, which listed at 81% premium over issue price, listed at 1990, and the issue price was 1101, right? Now, there are two things. You could have just got out of this on listing. Of course, you have to pay 15% those days, or now it is 20% short-term gains. So you lose some of your gains. But obviously, when the market is going up and market was going up, not many would liquidate. So what is the current status of this stuff? So this is the current price. It is adjusted for bonus and split. So the cumulative return is negative 40% and the CAGR is negative, right? So it is given negative returns on a long term. Not just Nazara Technology. Let's take a look at some others. Nika, listing price 2000, right? It was 1125 and 2000, almost 100%, right? Maybe 80-90%. So the current price, again, it is adjusted for bonus and split. The cumulative return is 32.8. And what is the CAGR? 9.2. Tata Technologies, 500 and listed at 1200, which is more than double. The current price is 686. Cumulative return is 37.4. And what is the CAGR? A mere 17.3%. I'm sure you're thinking I'm only showing you all the stocks that have actually not given good returns, and that would be unfair. Let me share. Yes, there are some that have really given good returns, like Paras Defense. The issue price 175, listing price 475, and current price is close to 700, which is 48.2% compounded returns. And Zomato. Now, I own Zomato, but I did not subscribe to the IPO. I purchased it for 55 per share later on when the prices fell. I just followed a fund manager, the instincts and my own instincts, and I purchased. I, of course, purchased it even at 100 and some lots at 200. So Zomato has given almost 60% compounded returns. Sigachi Industries, which was on the top, right? How much? The listing gain was 270%, but as of now, the compounded returns is mere 22%. That's it. MCure Pharmaceuticals, and this is a company that I subscribed and got the allotment. Of course, I got the allotment, and I also purchased a little later when the prices fell below the issue price and slightly when it was above the issue price. So here the CAGR is 22.5%. So this is the second company that I got allotted. So now if you see some of the top funds, top companies which had great listing gains, their returns are 20, 17% or whatever. Now in the same period, in the last 3 years, what has happened to mutual funds? Of course, Nifty and Nifty 50 and Nifty Next 50 have given good returns, probably close to this, but it's interesting to see what has mutual funds given. Probably this will change your understanding and your mindset about IPOs. Now, these are large cap funds, and this is a list from ET Wealth, and this is compiled by Value Research. So, what have the large cap funds given? On an average, they have given 20%. Some of the top IPOs, which had great listing gains, have given, for example, Paras has given 22%. Tata Technologies has given only 17%. 3-year return, almost same. So in the range of 18 to 20%, which a lot of the IPOs which had huge gains haven't given. Some of them are negative, like Nika. What about mid cap? Average 27, 28, 30%, even in 3 years. Small caps, almost the same in the last 5 years. Flexi cap also have given about 25%. And some of the aggressive hybrid funds have given that much. Got 34, 20, 25. So at least average 18 to 19%. Better than Tata Technologies. So what does this tell you right now? For all the hard work everybody does to subscribe for these IPOs, wait for the allotment and not get the allotment, and then again try, then get the refund back. I just mentioned you already lost the time in the market. That is one big drawback. But I believe the biggest loss is the returns. Everybody chases IPOs for returns. Probably a lot of them want to buy it and sell it on the listing day, which many don't do. Maybe some do, some don't do. I don't know about you. Probably you would like to keep it for long. But see the returns. You are much better off in a mutual fund, even a large cap, let alone mid cap and small cap and flexi cap. Even a large cap and an aggressive hybrid could have given you much better. After all that, all the hard work, everything you do for an IPO, and mind you, a lot of the IPOs have become negative. They listed negative and they are still negative. So, what is this, all this commotion, all this excitement about IPOs? Yes, the promoters and probably the employees benefit because they get allotment in some of these good companies. They get a good number of shares. Maybe the big, large mutual funds and the other institutions might get it. And if you're a part of the mutual fund, probably your mutual fund would have invested and probably made some listing gains. Who knows? But is it worth spending so much time on IPOs and chasing IPOs? I want you to let me know. And what about what we just saw was lump sum? What about if you had done SIP? In all these years, if you had just forgotten, just not got distracted with the IPOs and done your SIPs regularly, what returns you would have seen? Let us see. In a large cap fund, you would have seen some 14% returns. Mid cap and small cap, about 20% returns. And a flexi cap, around 18% returns. Is it not enough? And these are all guaranteed in the sense you guaranteed get allotment. There is no speculation. You don't lose time in the market. And your 5,000 per month, you don't even think about it. That 2 lakh 90 has now become 4 lakh, 5 lakh. So now that we have seen individual stocks that that were listed, and we have seen their cumulative return, right? From 21 till 25, what is the cumulative return? Let's compare those with Nifty 50 and Nifty Next 50 and see how different they are. Probably that could be a good insight. So here we have Nifty 50. The cumulative return is 62%. That means from here to here, the cumulative return is 62%. But for next 50, it is 124%. Now that means if you had put in your same money instead of the IPOs, you missed the IPOs for, and then you decided to invest in Nifty 50. Okay. So you just invest there, and this is what returns you would have got in the next 5 years, the last 5 years. Of course, the compounded will be less, probably 10 or 11% or 12%, but cumulative is also. Now let's compare these with some of the big IPOs which listed at huge premium and compare them. Let's go back. Nazara Technologies, although it was premium, the cumulative return is just minus 40%. So we can exclude this. What about Nika? Nika listed at a good premium, but the cumulative return is 32. And how much is Nifty 50? Around 60%. Nifty 50, next 50 is 120%. Okay. So see the gap. Tata Technologies is in 2023, so we cannot compare. These are in 2021, hence we are comparing. Paras and Zomato have indeed done well, around 300%, both. Although Paras defense was way ahead of Zomato in that sense, but there is a huge gap, right, between Nifty and next 50. What about Sigachi? Sigachi's gains were the stock listed at approximately 57 per share against an adjusted issue price. That means 16.3, and it was listed at 57. This is adjusted for the bonus or the split. So listing gain was 270%. Cumulative return is 122. How much is Nifty next 50? Almost the same. So if you see here, Nifty 50 or Nifty next 50 also could have given you great returns. So, what does this tell you, friends? That even Nifty 50, just the index, the basket of securities has given good returns. And what I just shared were individual stocks, individual companies. If you had got more than, if you had got a basket of IPO stocks, the returns would have been much lower. So you would have been better off with the index. So, what's the learning? Have you learned something? You want to quickly write down what is the learning? What is it that you have learned from this video? I have personally learned a lot. I'm so happy that I could analyze this. I could do all this research, could look at various sources, but it was worth the exercise. I'm convinced. In fact, long back, I had stopped investing in IPOs because of these few reasons that intuitively I felt. But now, after analyzing, I'm 100% sure I will not chase IPOs. It's not worth the time and the money and the effort that you put in. Finally, let's look at the learnings. What are the learnings? Number one, not all IPOs list at premium. So chances are 60-40. So you might get a good IPO or a bad one. To cash in listing gains, you have to pay 20% short term gains, of course. But before that, the probability of getting allotted is very low. So receiving refunds is losing time in the market. Even successful IPOs have given subpar returns in CAGR terms over 3 to 5 years, even compared to Nifty 50 index. Finally, mutual funds have given way above returns compared to IPOs. And finally, investing for financial goals, SIPs are the best. SIPs are the best. So, what's the verdict? Should we invest in IPOs? It's a no brainer that sticking to the old school of thought, mutual funds, SIPs, is the best way to invest. Keep doing it faithfully every month, sincerely, consistently. You will see rewards. Wealth is not grown by IPOs. Wealth grows through systematic, consistent investing because you capture every ups and downs in the market. The best way to gain, to build wealth is to capture all the ups and downs, not chasing IPOs, which are unpredictable, which really don't give you great returns over a long run. So, finally, I hope you have understood, you have got some good learning. Please, I am curious to know what you learned from this. Let me know in the comments. Did you really learn something? Was it convincing? Has it helped you to make a decision again when you have to apply for IPOs? Will you go for chase an IPO or will you continue with your SIPs and do your lump sum? Let me know in the comment box. And this content is focused on young families. I want young families to grow their wealth, build their relationship, and not get caught up into all these, all the IPOs and the commotion and the excitement and the FOMO, fear of missing out. A lot of us invest in IPOs because there's a fear of missing out. But friends, real wealth doesn't grow this way. If you want to know more content like this, do subscribe and be a part of this channel so that you get to know at the beginning when I post something interesting. Thank you and hope to see you again.